Ladies and gentlemen, good day and welcome to MUN Infraconstruction Ltd Q4 FY2024 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Yashish Parekh, Assistant General Manager from MUN Infraconstruction Ltd. Thank you and over to you, sir.
Thank you, Lisa. Good afternoon, everyone, and a warm welcome to everyone attending the Q4 and FY24 earnings call of MUN Infraconstruction Ltd. We have with us on the call today Mr. Manan Shah, the Managing Director of the company, and Mr. Ashok Mehta, the Group CFO of the company. The discussion in today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. I also request participants that any question related to data or bookkeeping, please get back to us or our IR advisors Go India in offline. I now request Mr. Manan Shah, the Managing Director of the MICL Group, to take you through the business and performance of the company, post which we will open the floor for the questions. Thank you and over to you, Mr. Shah.
Thank you, Yashish. Good evening, everyone. As we are gathered today to discuss the financial performance of MUN Infraconstruction Limited's Q4 and full year of 2023-24, I am proud to share that we have achieved significant milestones in our journey, marked by exceptional performance across business development, project delivery, and financial results. In the financial year of 2024, we continue to demonstrate our strong business development capabilities with the acquisition of 27.5 lakh square feet of carpet area in Mumbai's most coveted locations, namely Marine Lines, Pali Hill, Goregaon West, and Ghatkopar East. These acquisitions reflect our commitment to expanding our presence in key markets of Mumbai city. We have further solidified our position in the ultra-luxury segment with an acquisition of an iconic project at Marine Lines East in South Mumbai, which is set to become the second tallest tower, surpassing of 800 feet in the MICL portfolio. With 5.3 lakh square feet of carpet area, MICL is expected to achieve a projected PBT of more than 400 crore through a development management model. Our focus on timely delivery has set and it's become a benchmark in the industry. We successfully delivered 3 large-scale projects spanning from 9.5 lakh square feet of carpet area in less than 3.5 to 4 years. In the financial year of FY24, we achieved 2 new ultra-luxury projects, Aradhya One Park, which is the new age gated community living with 11 residential towers for sale, and Aradhya Avan, one of the tallest residential towers in the country today. Together, these projects span an impressive more than 10.8 lakh square feet of carpet area, showcasing our commitment to delivering exceptional living experiences. Upon the launch of Aradhya One Park located at Ghatkopar East, we achieved a record sales of 333 crores, which is almost comprising of 25% of the total revenue potential of 1,200 crores till March 2024. This remarkable response from our customers reaffirms the demand for premium properties in Mumbai market. We have significantly bolstered our financial standing by raising rupees 543 crore through a preferential issue in December 2023. As of January 2024, we have received 25% of the allotment money, which is rupees 136 crore, with the balance expected to be received by July 2025. This infusion of funds positions us strongly for future growth and strategic initiatives. Moving on to the consolidated financial performance of the company. The company's consolidated total income of rupees 1,360 crore was driven by its integrated business model, which generates revenue from construction, real estate, and interest income. Consolidated revenue from operations for FY24 amounted to rupees 1263 crores with contribution from both the EPC and real estate business. The EPC business generated rupees 737 crore primarily from the BMCT port project and other EPC residential projects. The real estate business contributed rupees 527 crore mainly from revenue recognition of projects like Aradhya High Park at Mira Road, Dahisar, Aradhya One Earth at Ghatkopar East, and ongoing projects like Aradhya Evo at Juhu. The new launches, Aradhya One Park at Ghatkopar East and Aradhya Parkwood at Mira Road, launched in the previous financial year, are yet to reach the revenue recognition stage. The company's other income of rupees 97 crore for FY24 primarily includes interest income generated from its investment in real estate development, projects executed under JV, associate or in DN models, which is considered part of its business income. Talking about profitability, in FY24, the company delivered stellar performance, achieving a lifetime best ever profit after tax of rupees 300 crore, reflecting a 16% growth over the previous year. MICL recorded impressive profitability margins with an annual profit before tax of 29.2% and profit after tax margin stood at 22.1%, positioning us as one of the best in the industry. The historical trend of prudent cash flow management has strengthened even further in the company's balance sheet, which remains net cash positive as of March 2024. Our secured debt at consolidated levels is negligible, standing at rupees 123 crore as of March 24, further decreasing to rupees 23 crore as of 10th May 2024. MICL is one of the few net debt-free companies in real estate sector, having cash and bank balance of rupees 741 crores, providing considerable strength for future growth. The forthcoming rupees 407 crores from the equity warrants holders of the preferential issue made in December 2023 will further enhance MICL's financial position for future project acquisitions. Currently, the company has utilized rupees 20 crore towards working capital investment for new projects and general corporate purposes. An amount of rupees 116 crore is parked in fixed deposit in banks currently. During the financial year 2023 and 2024, the company generated significant cash flow from operations of rupees 572 crore. Speaking about the operational performance of the company, we recorded sales volumes of around 3 lakh square feet of carpet area amounting to rupees 744 crore in sales. This was primarily driven by the successful launch of Aradhya One Park in Ghatkopar East and the positive momentum in our Atmosphere O2 project in Mulund West. Our collection for the fourth quarter was the highest during the fiscal year, totaling to rupees 376 crore. For the entire fiscal year, the collection amounted to rupees 1,197 crore, reflecting our robust delivery and customers' trust in us. This marks the second consecutive year where our collections have surpassed 1,000 crore mark. Continuing our trend of robust delivery, MICL Group delivered 9.5 lakh square feet of carpet area and 20.7 lakh square feet of construction area across 3 large-scale projects, which is nearly completed in less than 3.5 to 4 years. This underscores our commitment to delivering ahead of schedule, with projects completed at least 1 to 1.5 years before the scheduled date. We are pleased to note that all our completed projects are almost sold out, with negligible inventory remaining with us. Looking ahead, we expect to deliver the other two ongoing projects, the ultra-luxury project at Juhu, naming Aradhya Evoque, and our Atmosphere O2 project at Mulund. Tower F and Gateway, the commercial towers, part of the Atmosphere project by Q2 of FY2025. The RCC work in both towers is complete, with finishing work going on at the final stages. Construction in the newly launched project Aradhya One Park is progressing well, with initial excavation work underway. Similarly, in the Aradhya One project, construction work for its sail tower has reached the foundation to plinth stage, with 4 slabs already casted for the rehab tower. On the port division front, we have made significant progress, with 85% of phase 1 of BMCT project executed and phase 2 work progressing as per schedule. Our EPC order book stands at rupees 823 crore as of March 2024, reflecting a strong pipeline of projects. The composition of our order book is 86% infrastructure projects, and the remaining balance consists of residential projects. In the infrastructure sector, we are executing a government residential project in Pune, which is expected to be handed over by the end of May 2024. Additionally, the BMCT project at Nhava Sheva is progressing well and is likely to be completed in next 1 to 1.5 years' time from now. Our residential projects are also progressing at various stages of completion. We are also happy to inform that in our USA division, we have completed our first project, which comprises of 2 villas, and have received the certificate of occupancy in the last quarter of FY24. We have already sold 1 villa out of it, and we are hoping to close the other units soon, and the talks are going on with the customers regarding the closure. Also, we have got around $11.5 million of liquidity balance right now in the US, where we are constantly looking for new projects that fits our set of requirements. Looking ahead, I would like to discuss our company's revenue visibility and upcoming launches. In our real estate portfolio of total 60 lakh square feet of carpet area, nearly 6 million square feet, ongoing projects comprises of 21 lakh square feet, and we've got an unsold inventory of 13.4 lakh square feet, with an estimated sales value of over 5,000 crores, mainly comprising from the new launches. Upcoming launches comprise of 39 lakh square feet, with a sales visibility of rupees 10,400 crore. Overall, we have a total revenue visibility of over 15,400 crore in the next 5 to 6 years. As we progress, MICL's portfolio has a higher share of projects being executed through JV and DM model, the sales of which will not be reflected in consolidated revenue of MICL. The projects include under executed through subsidies, only DM fee adds to the top line and PBT, while projects executed through JV and associates, the share of the profit from that then adds directly to the profit after tax. In FY25, we expect to launch another 11.5 lakh square feet of carpet area, with sales potential exceeding rupees 4,250 crores. This will include the newer ultra-luxurious projects which have been currently acquired, naming locations at Villeparle, Pali Hill, and Marine Lines. Also, additional to that, we shall be launching the remaining 2 towers of Aradhya Parkwood, Mira Road, which caters to the medium to premium segment. I would like to now open the floor for question and answers. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Isha from Axis Securities. Please go ahead.
Hi. Congratulations on good annual numbers. I basically have two questions. First one would be the upcoming 15,000 crore sales potential. So the additional 5,000 crore that we're seeing, that would be in which areas of Mumbai, and also what business models would we be using for those?
Hello. So basically, we have acquired at 3 new locations. One is Pali Hill, which would be a joint venture development project between, there are 2 other developer partners with us. So we would be holding around 33% equity in that Pali Hill project.
Okay.
Talking about the Marine Lines project, that would be another DM model project, where again the carpet area is nearly 5,25,000, and where we would be getting the sharing from the top line. So that would be the DM model.
Mm-hmm.
The third project which we are anticipating is going to be at Goregaon West. That is just under acquisition. Again, that would be a joint venture development where the acquisition is just completed in terms of the tranches. The launch would be due in the next financial year. Since it's an SRA project, so it takes a little time to do the clearances. Also, another additional project which is going to be at Vile Parle, where we had already completed 1 building, and now we are launching the phase 2 of that project, which is going to comprise of around 3,50,000 carpet area approximately. And that is also a DM model. So again, that revenue will not come in, but the profitability would hit our balance sheet.
Okay. Okay. Great. Thank you.
Thank you. The next question is from the line of Dhananjay Mishra from Sunidhi Securities and Finance Limited. Please go ahead.
Hello. Sir, congratulations on strong operating performance. Am I audible?
Yes, please go ahead.
Yeah, sir. So, sir, this year in FY25, we are targeting 2 projects, which is Bandra and this Pali Hill Bandra and Marine Line project. So, and then we have already ongoing projects. So, what kind of pre-sales number we have in mind for FY25? Because although we have done well in terms of good collection, but our pre-sales number is not good in FY24. And in terms of second question is in terms of new business, new project acquisition, how we would like to go ahead, because we have 740 crore kind of cash, and we will be receiving 400 crore more on warrant conversion, so we will have close to 1,100 crore. So now going ahead, we will be doing more on DM kind of model, or we will go 100% on our own in terms of new project acquisition. That is for my side. Thank you.
Thank you. So for the next upcoming year, the targeted launch is around 11.5 lakh square feet, which the potential is going to be nearly around 4,200 crores, which is going to be from multiple projects, which is Vile Parle, Pali Hill, Marine Lines also, and also the project which is under construction, which is Aradhya Parkwood at Mira Road. We had only launched 2 towers out of the total 4 towers. So that will also contribute to the launch. Regarding the model which we would like to continue, honestly, we have always kept the modality open because we are considering ourselves as opportunistic for people. Wherever we see an opportunity lying in where we can make better money, we always try to take that. Like for example, Marine Lines project is a half-cooked project by a past developer, and we could start the project sooner. So we thought of entering it into a DM model where the cash flow also reduces the initial capex basically, and we can start that sooner. But at the same time, if you see the Pali Hill project, that's a complete redevelopment project where we started it from the scratch. But yes, of course, the location is very, very premium, and we are seeing a significant demand in the ultra-luxury space. That's why we've been operating there as well. Similarly, Parkwood is a medium segment where the apartment starts around 75 lakh rupees of 1 BHK. So there again, it's a mass housing project where 2 towers already launched. We are more than 70% sold out for those 2 towers as of today. And the rest 2 towers, we are planning to launch it maybe in next 3 months' time or maximum 4 months' time. So this is how the pipeline is looking like. Talking about the cash flow which is lying with us of nearly around 700 crores. See, over and above this, also there are a lot of projects which are in the final leg of negotiation, which we are hoping to encash upon in next 2 quarters. So we are in discussion for at least 3 more large-scale projects where this money again will be utilized for those projects capex, and at the same time, the existing projects would also require a little bit of cash flow requirement because they are just at the initial launch stage. So this is how the breakup of the money is also going to be utilized in the next upcoming quarter.
Okay. So what kind of utilization you see for next 2-3 years in terms of deployment for existing as well as new project from the current cash?
See, I believe with the new acquisition which we have not yet announced, which is on the final leg, if I include those as well, I think we would be investing around 700 to 900 crores.
In next 1.5 years, sir?
That's right.
Okay. And secondly, on EPC business, because we have, real estate EPC and as well as other business. So there we have seen order book is shrinking, and then although we are doing well in terms of EBITDA margin and profitability, so what will be our strategy in that segment?
So if you see the EPC, what usually you are seeing is purely the external order book, which is in the infrastructure side of it. Right. And our own projects does not reflect onto this because that gets executed by the same company. So because as a developer we are saving money, you don't see an EPC order book per se coming in, but at the same time I'm saving that EPC margin and making that money in the real estate district. And the total number, if you see in terms of the construction area, which we are going to execute in next 6-7 years time, is going to cross more than 2.5 crore square feet. So that also indirectly comes to us in form of either saving, and few projects like DM model, there we give an EPC order.
Right.
Yeah. So the portfolio is not shrinking. The focus is on real estate, and EPC gets executed in-house itself. So that comes in the form of a saving indirectly as a developer.
No, I was more talking about non-real estate infra segment. So
infrastructure side, we currently have the port project going on, and in terms of future, we are seeing a much larger ports going to be announced by the government soon. So we have anticipated on that, and these projects go up to almost 35 to 40,000 crores in terms of the total project order quantum.
Okay, so we have bid in place in some projects.
But yes, we will definitely be bidding for those projects.
Okay, that is all from my side. All the best of you. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Majid Ahmed from Smart Sync Investment Advisory Services. Please go ahead.
I'm audible?
Sir, your voice is sounding a little feeble.
Okay. Now I'm audible? Am I clear now?
Proceed.
Yes, sir. Very good set of numbers. Sir, so regarding the EPC, which you have now recently talked about, so of the total value that you get, how much would be the revenue that you get? Any numbers can give on that? That's my first question. And secondly, what is your mid to long-term plan in the American market? Because as you are going well with partnership with key players like Marriott and something, how are you plan to grow in that space as well?
So in terms of EPC, the order book is around 823 crores, out of which the major portion is from BMCT. And like I mentioned to the earlier caller also, that we are focusing on to, if you talk about EPC real estate side, so yes, the focus is there on only a RA project where the order book won't be seen because it gets self-executed. But we are definitely eyeing on to the new infrastructure projects which the government is going to be announcing regarding the port sector specifically, because we see a better margins comparatively to the other sectors. And regarding the US sector, like I said, one project is completed. The sale is going to get completed for that specific project. The second project, the sale is yet to begin, which is the luxury housing project where we've collaborated with Ritz-Carlton Residences by Marriott. So that sale, we are anticipating probably maximum by, I think, Diwali or December. We should be commencing on that. So that also revenue will start flowing in. Over and above that, we are in talks to acquire a couple of more projects, but the due diligence is going on, so nothing is conclusive. But yes, we are aggressively looking for projects over there also, and it's again a shared portfolio of villas to community living projects to multifamily. That's how we spread it. And currently we are operating in Miami and Florida's other cities.
Okay. So my last question is, you also mentioned that in the EPC section that your presence is also in Tamil Nadu. Like, what's going on there on the EPC side? Can you brief me on that, or any project you have, or any sort of negotiation?
Misconception. We do not have any project in Tamil Nadu.
No, none. Okay. Even in EPC. Okay. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Nalin Shah from NVS Brokerage Private Limited. Please go ahead.
A very good evening. At the outset, let me congratulate the management for an excellent performance, particularly when I look at your press release with last 4 years, 5 years kind of a performance. You have almost from you can say negative figure of 7 crores, you have risen to 300 crores in terms of profitability. So my first question will be that from 32 crores kind of a profit, we have risen to now 300 crores in PAT. What is the kind of pattern we can look forward to for next 3, 4 years or 5 years?
So, thank you so much for the appreciation. See, the principle which the company has always been following, if you see historically also till date, the parent company has always been debt-free.
Correct.
Secondly, the way we've been utilizing our funds is, if you see every project of ours, whenever it is launched, we always strive to achieve excellent sales, which results in a much better cash flow capability of the project, resulting into not taking any further debt onto the project if not required. Secondly, the company's additional capex is again not required to be put into any of these projects, which has resulted in good cash flow remaining with the company to acquire further new projects.
Correct.
So if you see today's cash flow position, the company has got 700 plus crores, which we are utilizing to expand in Mumbai city. And within less than 5 years of time, if you see, the portfolio has grown to nearly 6 million square feet of carpet area.
Correct.
We are hoping to reach 10 million square feet in next 1.5 years' time with the existing money, without even needing to leverage any further debt.
Absolutely.
And this is the result of which you are seeing the profitability going higher.
Correct.
Other reason is we have been very, very choosy onto the projects, because we have seen developers picking up projects in a good market, left, right, and center. But we have always been cautious on picking the right location and the right kind of a product, so that we don't have to suffer on the pricing, and then at the end the profitability goes for a hit.
Correct. So, coming to your, the luxurious projects at Ville Parle, Pali Hill, and this Marine Lines, I think you said about 10 and 10.8 lakh square feet or something, if I remember correctly. So, with this luxurious projects, I'm sure your profitability will be also much better. So, can we have some idea, because the DM model and all this mixing, we don't know what is the kind of top line growth can come. Top line growth can be lower, but bottom line growth can be faster. So, if we can have some idea about what is the kind of the growth in terms of top line and bottom line we can expect over a period of next 3-4 years?
So the total, the projects which you mentioned is nearly around 11.5 lakh square feet.
Correct.
It will have a potential of around 4,250 crores.
Correct.
Now, this is only the projects which is currently acquired. There are a lot of projects which are under acquisition, and we are hoping by next year, March, we would be, like I said, increasing the portfolio nearly by 40%. So the top, bottom line is what we could say is, if you've been seeing the growth journey,
right,
we've been growing on an average between anywhere 20 to 25% of a year-on-year growth in terms of the profitability.
Correct.
And we want to be probably maintaining those kind of steady levels, and probably with these kind of projects where the margins are higher and the market is very, very supportive in terms of, the sales.
Absorbing that, yeah.
Much better growth in the forthcoming couple of years, because the projects at which location we have secured are phenomenal, and people are desperately waiting to ideally buy at these kind of locations.
Correct. Correct. So, just
models will, you won't see you will see a growth in the top line, but ideally what you will have to see for our company is the bottom line.
Yes, absolutely. We are looking at the bottom line, and when I see your margins, PBT margin at about 29% and PAT margin at 22%, I find that you are surpassing the margins of Godrej, Rustomji, and even Macrotech developers. So, do you think that this kind of margins will be maintained, or because of the luxury projects you may be able to even improve those margins?
So, margins, honestly, that you're seeing again were from the past years, which were slightly, I would say, on a conservative side. We are definitely seeing an improvisation on these margins even further, not just by the luxury projects, but the way we are making the new projects. We are creating spaces which does not exist in the local market, like our Aradhya One Park project. This is the first of its kind in Ghatkupar East, where we have clustered 10 buildings together.
Right.
And we are creating a gated community. So that is the reason you can immediately see at the time of launch, and within 2 months we sold 300 plus crores.
Correct.
So that again reduces our leveraging, if at all required, in terms of the project requirement, which will again add straight to the profitability.
Absolutely. This is what I am saying. And my last question will be that you have said somewhere that, we are talking about some visibility of some 15,000 crore sales over next 5-6 years. Am I right?
That is right.
Yeah. So when I take it even, 5 years or 6 years, which means that we are talking of average, if I take 5 years, then 3,000 crore, and if I take 6 years, then something like 2,500 crores. So can we assume that, this sales territory over next 5 years will culminate into, maybe it is a journey. So maybe in 25 you will do, say, X plus something, in 26 something, 27 something. But by 5 years' time, do you see that we reaching at something like 5,000 crores top line?
We could, because I'll tell you the reason is we are not stopping after acquiring these projects. So we would be adding on to more projects every year.
Absolutely.
The current run rate in the portfolio that we have, we can see what's happening is this year's launch target is 4,000 crore.
Correct.
Next year we would be adding few more projects. So looking at those kind of stability, yes, we can say we'll be able to do a pre-sales of 5,000 crore on yearly basis.
I see. Okay. That should be, I think, phenomenal. And, I'm taking as if the margin is maintained even at 22 or 24%. There is a good chance that, from 32 we have gone to 300 crores. From 300 crores to go to maybe 1,000, 1,200 crores over 5-6 years should not be a problem. That's what I'm presuming.
We are absolutely positive on that, and we are hoping for the best.
Thank you very much. Manan, once again, congratulations for an excellent performance.
Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Dey from Nivshay Investment Advisory. Please go ahead.
Thank you for the opportunity, sir. I had this question that we saw a dip in revenue in year-on-year terms in FY24, despite some large projects that we have been delivered. But so can you please explain how much revenue has been recognized from this completed projects and how much is yet to be recognized?
So the detailing, you can get in touch with us, but I'll just give you an overall macro picture. The drop that you're seeing is basically because this year was a project, this year was actually the year of acquisitions for us, and we have launched only 2 projects. And also all the revenue, what you see, which was from a Dahisar project or Ghatkoppar's earlier project and Juhu project, that had already been contributed in the earlier quarters. And the sales had happened in the last year. So what happened is you saw those recognition already happening. And like I said, the Aradhya Park Road project and Mira Road and Aradhya One Park project, that has still not reached the revenue recognition stage. Plus the DM project, which also we have signed, that revenue also has yet not come. So if you're seeing on the revenue side of it, I would rather request you to see on the profitability side of it, where it significantly improved even compared to the last annual PAT level.
Correct, sir. And sir, I had this question. I just missed. I think you mentioned about this, but I just missed the details. Further, which are the key projects or launches that would be driving the bookings in the next in FY25?
So we are launching Ville Parle Phase 2 project, which is a gated community on SV Road. We're coming up with Pali Hill, which is going to be a redevelopment, ultra-luxury project. We're coming up at Marine Line, which is going to be one of the tallest skyscrapers, again a luxury project. And we are also coming up with the residual 2 towers out of the 4 towers at Aradhya Park Road, which will be the mid-segment project.
So these projects will be driving the booking for us, right?
That is there. And like I said, there are a few more projects which are under discussion, which we will be acquiring. We are hopeful that if those acquisition complete, we will be able to launch those also before March.
Correct, sir. Correct. Thanks a lot for the opportunity and all the best for the future.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Ladies and gentlemen, we'll take that as the last question. I now hand the conference over to the management for the closing comments.
Thank you everyone for participating in the phone call for MAN Infraconstruction Ltd.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Go India Advisors, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.